Most people think about how they can increase their portfolio, on which assets they will get the best return on their investment, but very rarely people think about how they can preserve their capital, and that's essential for the future growth and maybe also one of the most overlooked factors. After this video you will have a much better understanding why this is such an important topic, how to do it, and how preserving your capital will act as a multiplier for your gains once the bull market occurs. Yo guys, my name is Željko and welcome to Unsymmetric. If you look into the crypto markets today, you can often see periods of much lower volatility than we got used to. Recently we had a BTC price in a range of like $200 for 2 days, which is like less than a 1% price movement, and I haven't seen something like that for a while. Still, people are desperate to trade, people are desperate to see some price action, to take some profits, and instead of getting these profits and accumulating as much assets during the bear market, they're getting completely wrecked. Many of them force trades, use larger position sizes and lose a large percentage of their portfolio, while the big players are manipulating the markets and destroying retail investors as we are experiencing now. So one of the things that people often don't realize, maybe mainly because they tend not to put the things on the paper or in the calculator, but if you lose 20% of your portfolio and you gain back 20% on that, you won't be at the same number. If you have, let's say, a portfolio of $10,000 and you lose 20% of that, you would be left at $8,000. And if you gain 20%, you would be at $9,600, which is a $400 or 4% lose on your total capital. You would actually need to gain 25% to be at the original portfolio size. If you lose 50% of your portfolio, you would need to double your portfolio to get the original size, while if you lose 80% of your portfolio, you would need to 4x your current investment to get to the original size. The truth is actually that the majority of the people that lose 50% plus, they start losing control, and most often they continue going in a negative direction, and it's really difficult to come back from that situation. It's even hard to come back from more than 20 to 30% loss, both when it comes to the emotions and strategy, and this is the reason why you want to keep your losses small. If you succeed at this, it's very likely that you will have enough time in the market after some time to be able to understand things better and see massive returns in the long run. You can also download this sheet with a calculator on how much profit you need in order to neglect the loss that you experienced in the description below. So now you understand that the larger the percentage that you lose, the returns that you need to return these losses scales exponentially. So the main thing is that you shouldn't try to maximize the profits all the time. I made this mistake multiple times, and the sooner that you realize that if you try to maximize everything, you will suffer much bigger losses sooner or later, the better you will be. You probably heard the quote, "Don't throw all of your eggs in one basket," and that comes with a reason. It can apply to many different things, but firstly always have a hardware wallet, and in my opinion you shouldn't even hold all of your assets in one wallet, especially if you don't use a hardware one or if you are holding money on different centralized exchanges. I know it's a lot of hassle to open different accounts, do KYC, it's hard to track everything, some exchanges have higher fees, you need to pay multiple fees for transactions, etc. It's a hassle, but trust me, if you would ask the people who held the majority of their assets on FTX, on Celsius, Voyager, how happy they would be if they distributed the assets on more places or in a hardware wallet? Probably a lot. Second thing is asset distribution. I often hear from people, I did a thoughtful research on X project and I hold 80-90% of my portfolio in that, and once you think deeper you realize that you can't affect in which direction some project will go, and it might not be even the project with the better technology comes out and destroys this one. We are all aware that the blockchain is still early and we can have Elon Musk tweeting about some project and the project can go down. Imagine if there's some bad regulation, some exploit, or if the face of that project dies. I know it's not highly likely to happen, but when you're investing 80-90% of your portfolio into one project, you don't want to experience that. so you should decrease the risk exposure, since if it happens that the project drops in price highly or doesn't reach new all-time high or expectations during the bull run, it's very unlikely that the rest 10 to 20% of your portfolio will bring that huge returns to cover this 80 to 90% that you missed out or even lost. So don't go all in one project. One of my next videos will be fully dedicated to portfolio structure, how many assets you should hold, which niches you should focus on, what to look for when you're creating portfolio, etc. If you're trading in a stage of the market that you are currently in, you should use a smaller position sizes, and instead people use bigger ones due to a decreased volatility in markets. Then, once they are in a losing trade, they are hesitant to accept smaller losses. Instead, they end up in a situation where they need to accept bigger losses or even get liquidated. Also, they often don't want to exit a losing trade, and then they end up paying large funding fees, which again leads to the large losses in the end. Also, many traders chase small price movements trying to identify local tops and bottoms, not using stop losses, and that leads them to even bigger losses at the end, especially if markets are like the current one where big players are driving the prices up and down. So now, once you understand the importance and how to preserve your capital, you should be aware of the fact that pretty much the more capital and the more assets that you acquire during the bear market, it will increase multiple times once the bull run starts. For example, if you hold 2 Ethereum, which is around $3,000, and you manage to earn additional half Ethereum, which is like $750 currently, once you're in a bull market and let's say the Ethereum price goes to 5k, you would have $10,000 with 2 Ethereums or 12.5k with 2.5 Ethereums. So that means that your $750 that you earned on half Ethereum turned into 2.5k. That's insane. So pretty much every few percentage that you manage to increase your portfolio now will be worth much more as the time goes on and once we get to the bull market. I talked a lot about this in the video where I talked about compounding, so make sure to watch that one as well. This applies to losses as well, and that is the exact reason why you want to be careful about every penny and invest as much money as possible during the bear market or when you see positive momentum and that we are taking off and we are transitioning to the bull market or relief valley. In the previous bull run, BTC went 20x up and Ethereum went 60x up, for example, which means that even if we have some diminishing returns and we miss the exact top and bottom of the market, our investment would still be worth much more. Staying in the game, learning about the markets is the most important thing, and the majority of the people won't be profitable in the first year or two, but if they remain consistent, minimize losses, learn and educate themselves, it will bring them great prosperity and it will be worth in the long run. If you give up due to losses that you experienced, you never know how close you were to a point where you would start getting profitable, but you gave up and quitted. Often people make some mistakes and they are unable to recover, staying in the cycle of constant mistakes, and it's important to realize why this is happening as soon as possible. Also, always leave some cash, some dry powder on the side, since you can't predict the exact prices and what will happen, and you might miss some great opportunities since usually markets continue going down when nobody expects them to do that and they miss these opportunities. Feel free to reach out or ask any questions in the comments below. Please consider subscribing since it helps to push this video to more people. Thank you for watching, have a wonderful day, stay strong and healthy. Bye! Cut losing positions, add to winning ones. If you're in a losing position and you're adding more capital to that, you should reconsider your strategy. The first lose means that you miss the trend, and in the majority of the scenarios it's much better to accept the lose and move on.